Hello friends, very good evening. Myself Bala. I'm SEBI certified research analyst. I'm welcome you all to my YouTube channel Talent Traders. Those who are not yet subscribed my YouTube channel, kindly make subscribe the channel to get more update on intraday and positional trading strategies. Here this video I'm going to analyze the Nifty. What is the best strategies for a Nifty and what should be the right option strategy for this particular expiry last week, so that I'm going to explain in this video. So if you have any other questions or any other doubts, you can contact me through YouTube, or even you can contact my number provided in my description. You can contact through WhatsApp, and even you can call me. So here I'm going to analyze the Nifty and what should be the best trading strategy with the risk reward ratio. So we are going to find out that kind of strategy here, and how we can apply the strategy and what is the margin and everything we can discuss about this video. And this is the strategy which we can apply for any even stock or index, whatever thing. So you can, so this is the Nifty daily chart, where daily Nifty one day it went up and next day it comes down. So that thing happened, gap up and gap down, like kind of trade is going on in index, both the Nifty and Bank Nifty. So this kind of scenario, what are the best option trading strategies? So with the risk defined the trading strategies, that is very important. So if you are taking a positions, if tomorrow open by gap down, or if it is open by gap up, so we are not affected by that gap up and gap down things, right? So we have to very careful about the thing. So what currently Nifty is trading, the range between, what is the range it is trading? So this is the recent high and this is the recent low. So this is the recent low. Here the Nifty and Bank Nifty, where Nifty is trading, this is the range for the Nifty, that is what 8,897 and 9,300, 9,390, almost 9,400, where the Nifty made maximum for the last 5 days, 5 6 days, up to from the 20th April. So that is the highest price, and after that it fell down to 8,900 level, and again it recovering, and it was trading in the range of 8,900 and 9,400. So here what I am expecting, these are the range where the Nifty is trading, or even if you are want to take the Nifty's range up to even some other days before, or even more times from 15th April, the Nifty is trading around 8,800. So these are the levels. Now Nifty were trading in the highest range, okay, to this, okay, the 8,400 and 8,819. So these are the maximum range where last 15 days, that means from the 15th of this month. So still Nifty were trading this range. Now it is trading highest level. So this is the highest level. Now today it reaches the same highest level near about, and end of the day it ending with the lower level. As per the candlestick charts and everything, what we have seen, there will be a daily it forms a, once it gap up, but the real trading is very least amount. So even today Nifty opened by gap up around 200 point, 170. After that it moves another 30-40 points in higher than the trading range is very minimum, but the range of the star index in opening itself, it moves the maximum range. 90% of the total range is covered in the first 15 minutes or even opening itself. So this kind of time, how we can effectively analyze these strategies, or what are the best thing which we can apply. So what I'm thinking over here, so Nifty it's trading around 9,282, that means 9,300. What I'm expecting, Nifty will not move more than that. So my expectation, what I'm saying you, Nifty where it is trading, so let's show you what I'm expecting. The range for the Nifty is around, this is the range. So here Nifty is trading likewise. So my 9,390 is the higher level, and 8,900 and 170, or 800 and 170. This is the range for the Nifty up to first 15 days. Okay, so what I'm thinking here, this is the highest level where I'm thinking currently Nifty trading 9282. Okay, so this is the current market price. So I'm going to apply my strategy. What I'm expecting this particular point, I'm expecting there will be a down. Okay, I'm expecting there will be a down, even it maybe goes up. I'm expecting down. So my view for the Nifty is down from this particular point up to this expiry, up to 30th April expiry. Okay, so I'm expecting the down in the market. So right now market were trading 9308, 9282. So what should be the best option trading strategy which we build out, and we will do that new strategy, how we can find out there will be a strategical benefit. Okay, so let's try to do that. Sorry. So strategy builder, there will be options available in the option analysis. So now what I am expecting, Nifty will not move more than 300 up to this expiry. I am expecting there will be a down in this particular price. So normally I am expecting bearishness. So we are normally doing the buying put options. So the naked buying put options having the full investment risk. So here what I'm going to do, the strategy here, I'm going to take the Nifty options. So I'm taking the Nifty option. So 9300 is the current market price. Okay, so I'm going to do the strategy 9300. So here I'm going to buy the position at 120. Just a moment. So here, and the current market price of the Nifty is 9282. I'll take another option which I'm going to sell 9200. So let's, if I do this thing, so what I'm going to get the profit or loss, let's show you that. Yes, you see that what I'm going to get the benefit about this strategy. If Nifty goes even higher, okay, here you see that the margin required for the trade, first thing, the margin required for the trade, this is my strategy while I'm the bearish in the particular Nifty. So what I'm going to get the profit, this is my payoff chart. Whenever Nifty closes below the particular range of 9260, so this is my expected level where it's my break even to. If Nifty closes below 9260 is my break even point. Okay, this is my break even point. Whenever Nifty closes below this particular point, so I'm going to make money, but maximum profit which I going to get is 4500. This is my maximum profit when the Nifty is moves more than this particular point. Okay, 9260. If Nifty moves more than 9260, which I am going to lose maximum of 3000 rupees, that is up to wherever it goes, even 11,000 or 12,000, even 15,000, or whenever the Nifty closes above this expiry 9260, I'm going to lose somewhere around 3000. But when Nifty goes below 9260, I'm going to get maximum of 4500 rupees profit. Here I am taking the risk. My investment required for the trade is around 61,258. that is my capital required for the trade. So according to my capital, I am taking the 4.9 percentage of the risk, and which I am going to take the profit up to 7.3%. This the probability of profit is 47%. So here I am deciding there will be I am expecting downtrend, but even the market is goes anywhere in upside also, my losses should be limited. And this kind of trade which we have 1 is to 1.5 risk reward ratio. So this 1 is to 1 point risk reward ratio, that gives you perfect return when the Nifty crosses below 9260 up to this expiry. Or we can apply this strategy even intraday basis also. Whenever you got a minimum profit, you will be exiting out. If you are, for example, if I am going to do this strategy by 10 lots, I'm going to take a risk of 30,000. Even intraday, if I get a 500 or 600 rupees profit, I'm going to book 10 lots, which I'm going to take a profit of 45,000. So here the risk for the trade and reward for the trade you have to understand, but then also you can calculate the margin what you are going to invest. Okay, I hope you have understood the concept. And anyone who interested to open a trading account with me, I have provided my account opening link on the description, or you can take that account opening link and you can also open an account. And I'm going to planning to provide lot of option strategies and many more on my Telegram group. So you can also join my Telegram group in talent traders. The link will be provided in the description. So another strategy, if the same thing which I am going to do with the higher options. Now I'm going to take 9,300 in same strategy. So I'm going to do 9,300 put, which I initially buy. Okay, 9,300 put, which I initially buy this, and I'm going to sell 9,400. So another option. So there will be a market makes the high of just a moment. How much risk and reward benefit and margin, what is the margin criteria, and everything we'll see. So because this recent high was the Nifty is 9,390, so even I can do the strategy over and above the highest price, so it will give me a benefit. And again you see that the strategy which is giving you the profitability. Okay, I'm shorted 9,300 put options, where I'm going to take 9,400 put option which I shorted, 9,300 which I taken a long in this scenario, which I thinking that there will be a downward trend. And again 9,300, just a moment. So I think I made a mistake here. Here this system which tell you when the this is what even it is saying about the bullish, where if you are taking this system which will give you a bullishness. Okay, and here your loss is limited to 3,000 and maximum profit, and here your break even is 949341. Here this time in this particular strategy you are selling the buying the lower strike price and selling the higher strike price. That is now 9,300 put option you sold at 120 and 9,400 put option you sold at 180, almost 60 rupees is the gap. So here this thing which will give you when the market goes above 9,341, so that will give you profit. And let's change that thing, 9,400 which I bought and 9,300. We can apply this option strategies either bullish or bearish according to our strategy. This is what when the this is the strategy which last strategy which I shown, that is what bullishness. Here I'm going to show you the bearishness, but the same thing which happened, but here the loss is big and compared to the reward ratio. So that is my profit ratio. So what I'm saying you, the two strategies which I'm going to do with the 9,200 and 9,300 strike price, both the ports, which I have taken a 3k risk with the 4k 4.5k profit. And if I do the same strategy with 9,300 and 9,400, so this time I'm going to take 4.5k loss and 3k profit. So this is not a risk reward ratio, is risk is more compared to the reward. So here my bearish strategy which I already do that, so 9,300 just like 9,300 I modify it, and here I'll go for 9,200. Whatever. Okay, I hope 9,300. Yes, if I do if I sell the put options 9,200 with I 9,300, which I taken a risk of 3,000 with the reward of 4,500. The same strategy which I applied with the higher strike price, I'll be going to the risk reward ratio which is smaller different because my risk is more than the reward. So this is the perfect one, and where you can do the strategy here. This is my bearish trade. So what I'm going to do, I'm going to doing that thing which is 9,300 put and 9,000. So here I take the when the market is goes below 9260, I'll be sure shot I'll be going to make money. And another way and opposite, if I bullish, if I am expecting bullish, but I will do with the put options. And the same put options, if I do bearish, the last strategy which we have already applied, that will give you so what we are doing. So 9,000 put option buy. Okay, and put option of 9,400. Here I'm going to sell. Yes, you see that this is a strategy which required sorry, you can do any one side, right? So we are not combine both the sides in the same way, but you see this strategy which gives you whenever Nifty close in the range of 9,200 and 9,300, either the way it generates the profit if Nifty moves this particular range. But this is not a right point what we are discussing here, but what we are discussing, that is 9,300 and 9,200 put selling, so that will generate you the right profit. So I will delete this thing, but I'll delete this, and we can check the strike prices with lower strike prices. Now we are short at 92 and 93. So now I am going to do 9,100 and 9,200. So how much I'm going to get profit? So higher strike prices we already checked it out, and the lower strike price this time we will check it out. So what should be my profitability or margins and everything if I calculated. This is the way I am doing the NIFTY which is not crossing above 9,400, that I am expecting. Here you see that if Nifty, that is also my expectation, I am expecting if Nifty will come down below 9,200 level. So the current market price of Nifty is trading, just keep understand what I'm discussing here. And if current market of Nifty is trading 9,282, so if I am expecting there will be a bearishness, so when the Nifty is crosses below 9172, so this strategy will generate me a profit of 5,400 if my expected thing is bearish, and my risk reward ratio 5,400, my risk ratio is 2,000, so which gives me a 1:2.5 like that risk reward ratio. So this is the thing which I'm going to explain you. When you know the direction, if the direction is not open, there is not a big issue, but if you are taken, the risk is very small. The risk is very small. So using that risk reward ratio management, you can do the best options trading strategies when you can perfectly use that. So let's tell you that what I'm going to explain here right now. So let's do that. So currently Nifty were trading 9,282. Okay, so my view is bearish. So what I'm going to do, my view is bearish, so the strategy which I'm going to do on the Nifty. So here the first strategy which I'm going to tell you, the 9,200 which I bought and 9,100 which I short. Okay, so here 9,200 which I buy and 9,100 put which I sell. Okay, this strategy whenever market goes down, so you see that market goes below 9,172, this time you are going to get the maximum profit of 4,500. okay, so here the risk reward ratio for this strategy which gives you 2,000 rupees risk and reward is 5,000 plus. Okay, and another strategy which we have do the say opposite strike price, sorry, higher strike prices, which is 9,200 and 9,300. Both are puts we are doing with the puts, one is buy and this one is sell. So here I'm going to take the risk of 3000, which I'm going to get 4500 profit. Up another strike which is 9300 and 9400. The strike price here I'm going to take the risk of 45 and reward of 4000. So here the risk reward ratio is not good. So these two things which you can apply when the Nifty goes below. So this here this strike price is record 9172, but this one taking your 9260, the cost prices. When market comes down, if it's settled in between this range also, you can get a profit. Because of this strategy will generate you 4-5 profit. If market closes above, you are going to lose this much of amount. Even you can get some good amount profit while you are taking the risk of somewhere 5000. There will be chances you will be getting the profit is more than 9000. It's taking the risk of 5000. There will be a 1:2 risk reward ratio applicable while if you are doing this strategy perfect way. Let's do the same. We'll add the same another thing. So 9300, which I'm going to buy. Let's do that. So what is the risk and reward ratio if you are doing both the option at the same time? 9000 initially, which we are shorted the lower thing and we are bought at higher thing. Okay, so 9100 we short and 9000, so 9300 we are going to take long. Okay, and the same time we are going to short 9200 again. Here we are going to short the position. Again, this is show you different kind of strategy. You see that the risk and reward, where that what I'm exactly telling you the point. This is the point. So here we are applying the stocks options with the 4 legs. Okay, 1 2 call and buy and 2 call put, 2 put sell. But if you are to combinedly do the strategy using the option builder, so what I am analyzed, I am expecting there will be a downside in the market. First thing, I am expecting there will be a downside in the market. So that only I will do. But here what I did the option strategy, what it gives you the profit, and you have to understand. Let's show you that thing. So what we exactly do that. So 9100. So exact, I'll tell you that exact thing. 9200 put, and all the strike prices are put option strike prices, and 9100 put option. Okay, 9100 and 9300 and put, and 9200. So you can do with the strike prices. So this is the break even point. So we can get, and I have made some mistake here. Just a moment. Just a moment, I'll check it out. Just wait. Yeah, so when we are compare these things, we are shorted here. This is a short position and this is a long positions. Okay, and here this is the long position. Sorry, this position we are long and this position we are short. Okay, this is the one strategy which we are taking a 2000 rupees risk and 5000 rupees profit. Another strategy here, we are taking higher strike price long and lower strike price short. So you see that 9200, when we have two strike prices, one is long and one is short. So we cannot do combinedly this strategy. Okay, we cannot do combinedly this strategy. We will do any one of the strategy, or we will do another thing. We will ignore 9200 put, and here also we will ignore. So another new strategy which we can make from this idea, that is 9300 put and 9100 put. So same here, we long here and we short here. That is also be the strategy which will give you the combined profit of the thing. So that I am show you that the combined profit, what is that. So here 9300 put which you have taken a long, and 9000 put option which you have taken a short. That is 120 and 52. The risk for the trade is somewhere around 9000 5085, the total combined risk. This is the another strategy, that kind of way which we can apply the combined strategy. So here you see that we ignored 9200. So if you are adding 9200 put here, this is a different strategy, and if you have added a 9200 put here, that has also be a different strategy. Here you shorted and here you take long, so that initial risk we already discussed. But now we ignore the 9200 put options as well as call options, both the sides. So we have created a new strategy with the 9300 put and 9100 put. So here we have seen there will be a 9232 is my break even point. When the Nifty crosses below 9232, my position is going to make profit. And you see that the estimated premium for this option strategy is around 58,000, and Nifty crosses below this level, my proportion started going to make profit. And my if anything wrong about this portion, if Nifty keeps going up, I'm going to lose maximum 5,000, but the reward maximum is 9,000 up to my maximum profit range. So this is the maximum point where the Nifty is come to 9,100 level, which I'm going to get maximum profit, and here around 9,300 plus level I'm going to lose my maximum loss, which happened if the market goes upside. So we have seen the three different way. My view is bearish. Okay, my view on the index is bearish, so I can do number of strategies which gives you less risky and more profitable you can apply. So this is the three strategies which we seen on the Nifty that may give you so nice result once you understand or you apply the strategy on the Nifty. That will give you a short profit. I hope this video may be useful and you may understand something about Nifty, and you can also apply this strategy. Thanks for your time, and thank you very much. Thanks for being with me. And if anyone new to my YouTube channel, kindly make subscribe the channel to get more update on intraday and positional trading strategy. Thank you for watching this video, and thank you very much.